Welcome, my friends, to this video on candlestick analysis for professional traders. What I'm going to share with you today is how professionals read candlesticks as opposed to amateurs, and as usual, it requires a little more detail. What I find is that amateur traders are constantly focused on any one technique, whether it's an indicator or candlestick pattern or moving average. They're always asking, okay, what's the best candlestick pattern? What's the best moving average? What's the best indicator? As though any one of these things is going to help them in their trading, and they are not. So as the market comes back up here, so what that really means is a rejection of value. So the market tested these price levels above this high, and when we got that above that high, these prices over here, the market, which is this area right in here, those prices were rejected. In other words, the market participants said, no, we're not going to buy that. A few did, but the majority of the markets, the overall market sentiment said, no, we're only willing to pay, we're not willing to pay that high. So it's basically supply demand, and anything is worth what people are willing to pay for it. Vast majority of people are not willing to pay more than that price, and therefore it comes on down. So now we see the market coming off of these lows, and we have kind of an engulfing pattern here. At least the real bodies are engulfing. Come on down. And that's all looking sweet until, oh, wait a minute, we run into another type of shooting star type pattern. And again, same idea, rejection of value down at these lows. And so let's see how that works out as the market goes up and up and up and up, and whoa, wait a minute, it didn't go up, it went down. Hey, what happened? I thought these were supposed to be bullish patterns. In fact, not only did it go down, but let's see here, we go. Yeah, it went down. Now you can see, I think, all of that. It went down and actually broke this low. So it didn't only go down, it really, it was able to break through that support level. So what the heck? What's going on there? Why didn't that turn into a bullish pattern? Well, there's an issue here. Candlestick patterns, this is the bottom line rule for today. Actually, there's two rules. The step one rule is the candlestick patterns are very, 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 very short-term patterns. They do not determine trend, for example. Get a lot of people ask me about that. You know, how long is a candlestick pattern signal good for? And I always say very little time. It's really just a short-term pattern, could just be a bar or two even. But the key is, therefore, in order to use them effectively, we can't just use them alone. Because, yeah, that was a very short-term bullish pattern, rejecting these prices. But guess what? Again, we're talking real market stuff here. So what happens is the market, meaning all the market participants across the globe, for a while, they're like, okay, whoops, we are willing to pay more than that. But then it just goes sideways. And so there's indecision. And then finally, when the decision is made among the masses, among the majority, it is to the bearish side. So these candlestick patterns are very short-term patterns. They do not tell you trend. They do not get you into a new trend necessarily. Now they can, but not by themselves. Again, not in isolation. So you need other things. Trends are long-term moves, so you need a long-term indicator to measure trend. By definition, trend is a long-term move. Webster's dictionary definition is to extend in a general direction. Candlestick patterns do not give you long-term indications. Give you very, 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 very short-term. Now, again, you can use these in conjunction with other things. So use a longer-term indicator to determine your trend, and then use candlestick patterns that get you in that direction, and that's great. That's a good way to use them. But don't trade against the long-term. Or another thing you can do is use it with a long-term momentum indicator. In fact, let's do that. Let's bring up the RSI just as an example. So here we have, again, what I call a spike high bar. This is not technically a shooting star, but it's a similar concept. Again, where we're rejecting the price levels up here. So why would I not take that short? Now, a couple of things that I will always look at is support and resistance. So we do have resistance there, and that would actually favor that maybe being a topping pattern. We've got some pretty good volume, so you could look at it as a bit of a spike high in your volume. But here's the problem. RSI, momentum. You can see my settings over there. These are just default settings. So it's moving up. It's above 50, and this is just a simple little technique. There's many different ways that you can apply the RSI and use it. In this case, what I'm doing is I'm just putting the midline here, 50. And so we're saying above 50 will be bullish momentum and below 50 will be bearish momentum. Simple technique. You can use whatever technique you want. You can use other indicators for this as well. The point is you need a long-term indicator. And so here, as you see, sure, we get kind of a topping pattern that could be a reversal pattern except for one problem. It's against the bullish momentum as measured by the RSI. And that is a long-term indicator, or at least longer term. So this is the lesson to take away. You only will take bullish candlestick patterns when the longer-term indicator, whether you use RSI or whatever, is bullish. Only take bearish candlestick patterns when your long-term indicator is bearish. And then rule 2B is that also you only want to do it early in a new signal. Well, you've heard the slogan, the trend is your friend until the end, right? So the trend is your friend until the end really means trade early in the direction of a new trend, because the longer the trend continues, the more likely it's going to turn into your enemy. So the same thing here, whether you're using the RSI or whatever, we wait for, in this case, cross of 50. Alrighty. And then this is early in a new bullish momentum move, see, because it just crossed above 50. So we're not interested in taking that short. We're only interested in longs because we're early in this new momentum move. Now, the longer it continues, less likely it is to continue. So I'm not going to continue to take bullish candlestick patterns the longer this goes and the longer it stays above 50, in other words. By the way, if you want something that's really precise in nailing your entries for getting in and getting out of the market, by the way, that's super precise to the penny, paper, tick, go ahead and send me an email and ask for my cycle indicator. I actually give it away to my video users for free, and since you're watching this video, I'll offer it to you as well. It's something I do sell, but I'll give it to you guys for free. Just send an email to Barry@TopDogTrading.com. Ask for the free cycle indicator. We'll show you how to get it. All right, well, if you like this video, then understand that, sure, it's free, but, you know, it's good to do good things. And one of the good things to do is if you thought the video was good, then share good things with good people. Go ahead and click the share button below and let others know about it. Also, I am giving away one of my favorite trade strategies right now called the rubber band trade. I actually trade this every day it sets up. Still, it's not an old has-been trade. This is something I'm currently using. It works beautifully well, super high win-loss ratio. Happy to give you the instructions and the tutorial on how to trade the rubber band trade, where to get in, where to get out, all that stuff, and absolutely free. Just go ahead and click on the link in the top right-hand corner, right over that graphic there in the top right corner of the video, or also it's available with a link in the description below the video. And give it a thumbs up, and also any comments you want to leave below. I'd cherish your comments. Would love to hear from you. That keeps me encouraged to continue to create more free tutorials for you.